The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 22nd day of September. My pleasure to be here Monday through Friday on market days. 877-927-6648 is the number to call. And international is 727-445-1044. Love to hear from some of our overseas listeners. Now, this is a very important session for a number of reasons. Because Friday saw that reversal, quite a sharp reversal actually off the top, it is quite important to see how this follows through today to the downside, or whether or not we're going to try to get back to close to the highs and just have a pretty good week instead of a pretty lousy week. My bias right now is for a lousy week. I believe that we are in the we had in fact started the process of making tops last week. We waited patiently to see whether or not we would get that requisite leg D in the comp index. And absolutely, I don't know how this works. Can you believe it? The comp index made a peak C1, C2. In other words, that very broad NASDAQ composite index went to 4610.14 on the 3rd. Pulls back, and then a few days later it goes pop, and it goes to 4600.40 on the 8th. That to me was a particular chart pattern, like a U-shape top, double top formation. That said, I'm calling it C1 and C2, meaning there was still a chance you could get that D. That D would come about as if it was either a right arm extension in the Chapman wave methodology. That's my CD introducing the Chapman wave methodology. I discussed that. Or the rogue wave. What is the rogue wave? The rogue wave is where the sign of the beach says high tide at noon, and lo and behold, at 12:06, you've just gone to the edge of the water, and you thought, great, tide is going out. I'll sit right here and read my favorite book, get my dark glasses on, and put the suntan lotion on, start eating my sandwich, and then splash! This huge wave just knocks everything flying. By the time you've wiped your eyes and looked around, the tide is going out. You don't even know what happened because the tide had already turned internally. But there was that one single wave that didn't see the sign at the beach that said, high tide at noon. And whoosh, it went all the way up. So what did this comp index do? Suddenly, from the low of the 16th of September, where the technicals were indicating you were correct if you were short. There was that one wave that didn't see the sign, and it spiked where to? It went to 4,610.57. That's just 40 cents above, 41 cents higher, 41 cents in a $4,600 stock. Anyway, it goes there, makes that 10. And what do we get today? Monday, plop, opens, gaps down from the close of, not the low of Friday, but the close of Friday. And now it's almost at the low of the day. And so thank you, Steve Rhodes. Thank you to John Logan for 3 great hours. Let's hope that we can make another one right here. Just that's what we try to give you all the way through the day. Straight after me, you got even a more wonderful technician who has written books and essentially is the master of his craft. You've got Larry Pesavento. You've got programming right through Daryl Martin. You've got Dave White. Come back to Tom O'Brien, wrapping it up. I mean, what more could you want? But there is one thing that you want to check out. And really, if you're interested in trading methodology, if you're interested in developing techniques, if you're developing techniques that allow you to look at shorter-term positions using the same methodology, but you just decrease the time frame, look at the Nadex platform. we have something going on here at TFNN that is remarkable. $10,000 is being given away. It's totally free to you. No, not only is it totally free, you can go into the den. I see we've expanded the den, got more people in the den, and that is great because you can see these charts even, during the breaks. There are commercials. So that if you're listening to Tiger TV, which is a fantastic medium, I mean, what a wonderful medium that is. But if you're listening, you don't actually see us doing our charts during the break. Sometimes I could cover 2-3 charts. I've already moved on for the 3 to 5 minutes. I don't even remember what I finished the first segment in. I'm already doing the charts from requests in the den, etc. Even more importantly, what we're looking at here is that within the den there are questions. Here's a question. J&J asks, Basil, can you look at DDD if you have time? Well, I might only have time during the break. You never know. Mike wants to look at IRS. No. He was just talking about the IRS. Yeah, I wonder if there is a symbol IRS. Wouldn't that be something? IRS. Yes, IRS is Ursa Inversioness. Rep GDS. Got to find out what that is. Interesting chart pattern, making that H pattern. No, it's actually more like the M pattern. All right, so let's get to the numbers. Go to the front page. You've got this wonderful, wonderful competition going to start. Oh, I'm going to add Thursday the 25th. You have until Thursday night to sign on. Why? You can't sign on after that because everybody's got to get the stuff ready. It's just the work that TFNN has to go through to give this wonderful promo for Nadex free. 10,000 in prizes. Every day their prizes being given away. Just oodles and oodles of things. Check it out. Now, you've got until the 25th because after that closes the gates right there. So, let's do the numbers. The Dow is down 60 at 17,219. The S&P is down 14, way, way weaker than the Dow. In fact, it's funny, the Dow is now the stronger of the indices. Dow's down only 0.35%. S&P is down double. 0.71. So the S&P is down 14 at 1996. The comp index, and you remember I was talking about the comp index just a moment ago. There it is. Comp X. Look at that. Ooh, that is a deep, deep reversal. And look at that. Peak D. Remember in the Chapman wave methodology, what do we look for? The most obvious thing is to look for the low that pops out at you to start your wave count, the lowest low on the left side. And then you merely want to see 4 successively higher peaks. That's really the object. Yes, it can go higher. Yes, it can recycle. There are a whole bunch of things, but the prime objective is to get you to D. Wanted to do twice in the Combinex 120-minute chart. You went to D back on the 1st of September, 4610.14, and then again on the 19th at 4610.57. That was on Friday, and there you are. Got you turned down. So today, the 22nd, plop, what will be the target? 44.96, the 9-period exponential moving average to test the low of 44.99. That was the low at 11:30 on the 16th. So let's get out of this, and now we're going to look at something really important. Gold has just done nothing. Remember, I have been pretty negative on gold for about 2 years now. I still remain negative on gold. What happened to my gold chart? GC. Right there. Gold just keeps going down. The 9-period hasn't even had the strength to go to the 9-period exponential moving average. Look at the 120-minute chart, about to try for another H pattern here. But no, that's not the issue. The real issue is that I've been talking about the monthly charts in gold. I'm going to go to the continuous contract just to show you why. This particular pattern where the H, lowercase h, turns into an M, a lowercase m, and then breaks down. H turns into an M. It breaks down if gold goes underneath 1179.40 on the GCZ, on the continuous contract, and in the real contract, the December, if it goes under 1185, very negative. And all I can say is that the dollar, finally, I can concur 100% when it's spoken of as king dollar. That U-shaped formation in the monthly chart is very positive. Now, it's getting a little bit overbought. Gone past the one-to-one expansion in the weekly chart. That big, I said it was not a cup formation, it was a bowl formation, and bowl formations can turn out to be extremely powerful. So 84.75 was the last high, peak F, back on 7, 12, 13. Let me type that in so that I've got it. I don't have to always say, what was that? 7, 12, 13. It comes all the way back down to 78.91. The dollar index is now in leg C. Leg C with a brand new high today, recovery high that is, and it's above 84.75. It is at 84.84. Now, that might not sound like it, but that 9 cents with a close above last week. What was the close of last week? 84.74. It missed it by 2 cents closing above. But this is very positive because it's only leg C. Look at the MACD, how strong it is. Look at the stochastic at 96%. This is what you want in a bull phase. This is exactly what you want. Bear phase, you want the exact opposite. You want lousy technicals staying at the lows. Now, just one little thing here. Leg F/B in the daily. Look at the silver contract. I wonder if I've still got it here notated. Yes. Silver has gone down, and it has broken the left side low of consequence. In this case, on the continuous contract, it was at 18.449, and so far the low is 17.325. Well, the month isn't finished, but it's testing this 200-period moving average, which says to me we're real close on a monthly basis of trying to test and have a little bounce come back over the 200-period moving average. But believe me, this is a very critical week all round. And gold and silver bugs getting cleaned out. Yep, that's, in the den. Major flush to come. I suspect... Otherwise, I suspect that we're just going to constantly see rallies before we get the major flush. So, yes, the answer is yes, but I don't think it's just yet. It might be, but I'm watching real closely to see what's going on, because we also have to look at the euro and all these other aspects. Now, I don't want to miss anything here. Let me quickly go to... Yes, so that's the dollar. The euro, EUR, USD. Of course, this is nothing. What we really want to look at is what are bonds doing? Well... this is the euro, EUR, USD. There it goes. Little double bottom there, trying its best to desperately test the low. But I suspect that this pattern that I drew, unbelievable. Look at this. I drew this in, I don't know how long ago. This is the euro with the left side, right side price time match. And I had said that if you take this whole area of... November of 2012 in the weekly chart, and you identify the correct bar. In this case, I chose the bar of the high at the week of the 25th of October of 2013, 1.383. This is the euro. It did go high, but that's the one I chose. And then I drew a declining, what's called the Chapman wave inside wedge target line, and that said that by the week of the 26th of September, that's this week, a test should come of a very important 1.27546 to 1.2744 area. Those are the most obvious lows back in 2013. We'll see what happens here because we're real close. There's B. And it's only leg B to the downside. Wow. Hey, I hear the music. I don't want to talk right through the break, into the break. I'll be back. Basil Chapman, Tiger Technicians Hour. Send me some questions. We've got a chunk of things, but I do want to look at some of the indices. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just go through a couple of these things in order that I saw them. C1 here, C2. Okay. So what we're looking at is DDD is 3D Systems Core. Made a high of 97.28 in leg E, and then peak E at... in the monthly chart, so the manufacturer 3D printing objects. I went to this place on Newbury Street. It was a little gimmicky, the way it was put together. They give you examples that you can follow if you want to do the 3D stuff. I believe they also point you towards classes and things, but they also have a folder that shows you the incredible designs that have been made with 3D. They just have, you know, like a Mickey Mouse stuff. Just this, really kind of pathetic. They could have had much more interesting things there. But anyway, it's a store right in Newbury Street. I don't know what they're paying rent. Must be a fortune. Anyway, 3D Systems. I think SSYS is really the one that they focus on the most. SSYS is SYS. That is doing much, much better. That is how you can see. That's the one that's doing the best of all. Just made a little bit of a top. Stratus Inc., inventor of patent-fused deposition and prototyping, modeling 3D printing. So DDD, I'd spoken about this some time ago. Whoa, DuPont. No. 3Ds, not 2Ds. DuPont had a great move. Helped the Dow. So the monthly chart has got this inverted V shape, which is really like the lowercase h pattern. The monthly chart had a single leg up failure. After that peak F top at 97.28 comes down. There's that Roman candle. Chapman Wave Roman candle says, watch out at any time within the next 5 to 7 bars. If you get within half of the wick and start trading and holding there, you're going to not only test the bottom, you'll break the bottom. It's exactly what happened. It went right down through the low of 54.63, went down to 43.35 the week of the 2nd of May. Tried to bounce at that sudden news rate, must have been a news related spike, to 69.56. Hey, that's a big move. And then closes at the low 59.10. No, it closes at 61.62 near the low, and then continues on its merry way down in the pattern that I call the Eiffel Tower, straight up, straight down. So I would be, I'd be looking at this and saying, if you were short, I think you might be short. I'd stay short. I'd put a stop on part of my position at the 9-period moving average of 50.10. I'd put it just above that at 50.50. Most importantly, at 47.83. Actually, I wouldn't even do that. I'd make the buy stop on some part of my position above 1 penny above today's high. Why give away anything? 48.81. If it bounces to that point, it'll have a stronger bounce, but only a bounce because it's making inverse head and shoulders. That's why I'm looking at it. My guess is it's going to test the low of 46.05, the low of the 5th of August, and if it breaks that, the weekly chart gets even worse. So that's based on the daily for the left side low bar. If it breaks it, it's in real trouble. So the upside says, yeah, at any point you can get a bounce. It should only be a bounce. If it starts to trade about 50.50, I'd have to wait and look for another opportunity to short. I would not give back much. At least part of my position, I'd have a stop above today's high. And now the next question was, let me see if I can get it in order here. This is in the Dan. Merck. Yep, that was the next one. Merck. We were looking for the D. We got the D in the daily. Merck's trading at 60.76 up 27. There was some talk about them taking a takeover or a buyout or something. But in the meantime, back at the ranch, the stochastic and MACD have turned down. I think this is just a bounce. I think it's made some kind of a top here, but the weekly chart is holding well. If the weekly chart starts to take out 59, closes under 59, that'll be under the 9-period moving average in the market as it stands right now. I would say that that's a cautionary sign. It has made the leg D. Look at that beautiful left side, right side price time match. Look at that. This is the right there. Oh, I didn't put that in correctly. It should have been like that. And it went right to the Chapman Wave inside wedge. The inside wedge trajectory line, and it hit it exactly. I think all the work has been done in Merck. So I'm going to say all the work has been done in Merck. All I'm going to say is I don't want to get you out of a position you've been in for a year and a half or 2 years, but I am going to say this is a period where I'd start to think of taking off something. And it's not a matter of taking off to put back. It's a matter of taking off because there's a chance that you might not be putting it back for a while. That's the implication of the daily and the weekly charts as they stand right now. But the monthly chart is still very strong. That's why I don't say take everything off. Just reward yourself, take something off. I think that Merck is going to be coming back into the 57 to 55 area within the next 2 weeks, but could be wrong. That's why I don't want to change your position other than to say congratulations, you had a really good move. I'd take something off. Now, I hear the music again, and then we're going to be looking at I think FXY was the question. Would I look at that? There are a couple of stocks and indexes that I want to look at as well. IWM is one of the weaker ones today. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm just thinking here, wasn't this the period that they say sell Rosh Hashanah and buy after Yom Kippur? I think that's the mantra. Well, it's a little early because it only starts, I think, later in the week, Thursday. So anyway, we're looking at an arch formation. In my CD introducing the Chapman Wave methodology available at TFNN. This is chapter 13, slide 294 out of 476 slides. Shows you this arch formation. And what do we have here? There's a left side, right side price, time match, etc. Well, look here. This is the FXY. And if I'm going to the left side, right, the low was in August of 2008, but I like to bump against the wall. So in this case, I'm using the candle of the 1st of August of, 1st of of January of 2008. That's when it is. And we're going up against it. If I choose this doji candle right here, the smallest doji candle, this is the candle of June of 2011, not the high, because there are certain techniques that I teach. It's either a plumb line, an exact left side, right side price time match, or you've got to identify a specific candle. And I look to the right side. We've just broken 2 months ago, we broke that left side low. We'll see where this closes, but this is the FXY, the currency shares of the Japanese yen, if you're looking at Tiger TV. So that says that we've got a week to go, a little over a week to go in the currency. This is the week, this is the month, I'm sorry, that as it goes underneath the low bar, the same bar or no more than 1 month later must just reverse sharply back into the arch formation. That means the FXY is to get back above 90.15, the low of that August of 2008, that low. Has to get above it. If it doesn't, if it fails to do that, I have no choice but to look at the next trough, which is at 84.40, 5 points lower than where we are right now. And if that is taken out, wow, could go all the way to the June low of 2007 to 80.61. I like to only go step by step, even though it's a monthly chart and they're really big steps. But in this particular case, let's see what happens on Friday, because Friday on the weekly chart is very important in this sense that you've already made a peak. I believe it was a D. Let me just double check right here. Let's see. That was peak A, B, C. I think it's a D. And that D says, be careful, because there's a 1-2 down expansion, and it's done even more than that. So this weekly chart is going to fail miserably if it can't get above the 9-period moving average of 92.14 in the weekly chart. Very important week. Let's go to our first caller. We've got Jerry in Boston. Jerry, how are you?
Good. How are you?
I'm well, thank you.
I'm interested in the triple Qs and the IBB. How vulnerable are they?
I'd say that they're quite vulnerable, and I'll explain why. In the QQQ series, and of course the IBB, that's the NASDAQ Biotech ETF, although certainly not all the biotechs are four-letter names in the IBB, there are enough. That is very important. But most importantly, I'm looking at the QQQ series, and they will impact the QQQ, which has the potential here for a pattern that I've discussed many times before. Now, let me expand this so that we can see. I get rid of all the fib numbers and everything. Just make it as clean as I can. Remove. Okay. Now I'm putting a down arrow here because everything says that this should be a sell signal to sell mode in the QQQ series. What's most important is that spike that gave leg D recently at 100.46 saw very weak MACD and stochastic in the QQQ series. There was a pullback all the way to 98.05 on the 16th of September, bounced for 4 days, went to the high on Friday of 100.56, even another 10-cent higher high. Recovery high, not all-time high. That all-time high was in the 120 area. So this is very important because what we're looking at now is there's a pattern that I call the double hump. I always use that as a joke, and if we are doing a live show, I can sort of point out all these different aspects to it. But just to make it real simple, sometimes the MACD pulls back, and the stochastic pulls back. And then there's a move that basically in the Chapman wave methodology is the chapter on the right arm extension happens. You get this move to the upside, which has all the characteristics of both a rogue wave and a right arm extension, but there's no validity to it. In this case, the stochastic did rally, but didn't go over 80%. And on Friday, the MACD couldn't even cross positive, and there was a pretty high volume to the high. But, in fact, what happens is that the pullback we've got today is that it's almost like when you think of a coda that you've just got to conclude that coda by going once to a certain key, and then you can wrap it up. That's exactly what. So it tags that extra extension, completes the move, gets the IBB, which had a retracement, did not make an all-time high. It went to 277. In fact, 277.23 on Friday, which was underneath the 278.78 high, just to point it a little bit. And yet, what's so important is that the cup formation that's being formed in the weekly could become a classic double top. We're going to be watching this really closely. So I told my subscribers this morning they're highly vulnerable, both the IBB, the SMHs. We're going to watch to see what they're doing here. We are already taking positions in my opening call. So the question really is, and I'll ask you what you're doing, but my thinking here is the question is not how low will it go, it's how long will it pull back, and how long will it take before it even attempts to get back to the 278s to retest the all-time high, because the monthly chart is this extension to the upside was not with very strong technicals in the monthly in the IBB, which is the NASDAQ iShares Biotech ETF. Yes, Jerry, you were going to say?
Yeah, no, I know. I'm looking, thinking that sometime in November, December, these stocks will reassert themselves, but it looks like I should be patient. Yeah.
I definitely think so. In fact, I could do a price. Whoops, I'm about to sneeze. Let me just get rid. I'm back. I bet no one heard that sneeze because I finally found the little button I was looking for. Sure. Here we go. So I can do a price time match. In fact, we'll do it. It'll be quite interesting here. There's an uptrend. It's a trend line that I've drawn in the Chapman wave, an up track. And what that says is that somewhere at some time, the price of the IBB weekly chart should come back down and hit, well, it's a rising trend line. At this particular point, it's between 246 and 240. That's the level of support. Next week, it's a little higher. Next week, the week after, it's a little higher. So what I would do is I would do a left side, right side price time match here to the downside with an arch formation. Now, I'll make it a much smaller one, and I treat it like this: 1, 2, 3, 4. 1, 2, 3. I'll keep this on now. I'm gonna leave this, and we'll see whether or not this particular technique is going to work out. And then I'm going to go to the left side low of the week of the 18th of July, 242. So 242, I'm going to grab my trend line there, and I should take it all the way back because that's what I normally do in these situations. I'll take it to that candle right there. And I'm going to do it to the right. Now I can give you some kind of a projection that says if the IBB takes out the 9-period moving average of 267, it sounds like a lot, but look how quickly we've gone 4 points down. That would be another 4 points.
Yeah.
Right. So if it takes that 4 points out by Friday of this week and closes under there, I would do, that's a little aggressive. I would say that it would hit the 247 area by the 31st of October. No, it's not aggressive. I'm going to do that, and I'll do that for now, and then I'll do the more conservative one. I'll say that is, a little aggressive. So that's if we've got speed to the downside.
Yeah, that's very interesting. What's the same methodology for the Qs?
Now, the Qs have a slightly different pattern. So the Q in this particular instance, and I need to always add, I am totally wrong if there's a new recovery high. That's how simple it is. You break to a new high, I have to do the analysis all over again. In the Qs, same thing. You break to a new high above 100.56, it extends us out. Yes, it could turn out to be the same, but I have to redo the homework. In other words, I can't use the same methodology there. Now, in the Qs, I'm going to go to, in fact, I will go to peak D, right here because of the candles that have been formed. I'm going to call that a green line. It's a horizontal line. I'll explain. If you're looking at Tiger TV, folks, this is a particular technique that I like to use and I like to teach it because of the number of times that it actually works out, space to the right. It's not infallible, but at least it's a technique that has tremendous viability. And here we go. Oh, that is a long time. Wow. I'm going to be a little more conservative than that. That one takes you all the way out to, so my feeling right now, that takes you to December. I don't want to go to December. I want to see what's going to happen sooner than that. So I'm going to do this. I'm going to make it much more conservative. I'm going to go to that candle right there because that's the smallest candle so far. Go to the right. That's probably going to be too aggressive. It's going to be right in between. Some of it is purely mechanical, and some of it is artistic leeway that you got to have. Yeah, this one kind of corresponds. It says by the week of October the 31st, the QQQ series should be testing between 93.89, that's 5 points lower, that's a 5% decline, to 91.96. So that's more reasonable, and I'm going to draw this in, and I'm going to say that would be the trend line that I'd be looking at. That's the Chapman Wave inside wedge.
Did you say 91.96?
That is there are two levels. One is 93.89, the low of the 8th of August. And the other is the low of the week of 11th of July, 93.63. The 93s is where I'd go one step at a time, and that's your 5 or so % decline. Now, I'm beginning to think from the work that I did over the weekend, I didn't have as much time to actually send charts out to my subscribers, but I did do quite a lot of work. My understanding of the different methodologies that I have trying to put it together says that a great deal is going to depend on how the volatility index breaks out at this particular point. The VIX is at, I should look at the Vixen because you asked me about the NASDAQ. So I'll go to the Vixen. The Vixen right now, which is the trading vehicle for the 100, the NDX 100 volatility index, says that if the VIX at any point this week takes out, it's a Vixen, VXN is the way I get it. 15.56 up, 176 right now, up 12%. These things move so quickly when you get them right. They move so quickly when you get them wrong. So if it can close above 17.05, it sounds like a high number, but the way the market's looking right now, the vulnerability, I spoke about this, the reason why we already started shorting last week for my subscribers in my opening call, and then why we added to it this morning, is because I mentioned on Thursday and Friday that my 120-minute charts, all of them had gone to D, E, or F with a potential for a sharp reversal in the indexes. And the trough F in the VIX index said it should rally. So the Vixen, which is the trading vehicle for the NDX 100. I haven't got it notated here, but it went A, B, C, D, E to 1705, and then it pulled back to A, B, C, trough D. Now it's going A, B. This is leg C in the daily. I'm looking at this, and my suspicion based on the weekly charts of the Vixen and the VIX itself says that this Friday's close is going to be so important because everything about the work that I did, talking about the rising highs and the rising lows in the VIX weekly charts, even though the Dow and the S&P went to all-time highs last week, the VIX did not go below, not only didn't go below 1124, which was the low of the 25th of August, right. It didn't go below the 10.28 low. Obviously, if it didn't go below 1124, it didn't go below 10.28. But you would have thought that it would have at least tested 1120 based on the fact that the indexes went to all-time highs. So I put the package together, and my suspicion is that we have a top in place here. And I know it's a top that has the potential for being a top of consequence because the sectors that I looked at very carefully, as well as the fact that AZO, which is really the important AutoZone Inc. is a very important stock within the car truck parts area, and for my subscribers, we are short one of these stocks in that particular sector, doing nicely to the downside.
Nice.
This is a very important tell, and let me just look at CMG here. Yep, CMG is starting to crack. So we're looking at the big leaders. I'm talking about the stocks that were relentless on the way up. They were
the security stocks that you have to own. Yeah.
And they were also the stocks that were telling us a lot about our economy. Now look at this. CAR, Avis Budget Group. We do not have a position in this at this particular point. Peak E in the weekly, in the monthly, peak G/C with the doji high in the weekly, and the daily chart made. This is a very unusual thing, and I'd spoken about it. I didn't know how to count it. This is going to be one of those rare instances that have made a double top and a B. I don't know. I can go through thousands and thousands of charts. At highs, you very rarely get a failure at a B. So this is going to be really important because this is Avis, CAR is the symbol, trading at 61.47, down $1.88. My suspicion is that from what we're looking at, this is going to be the first time we see a pullback that could have more serious consequences. We'll know
Wow.
within 3 days.
So last week was sort of an exhaustion move.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman. So, a couple of different things I want to look at. In the Chapman Wave methodology, remember, the idea is to identify the most important low bar and then merely count each successively high peak. Here, remember on Friday, I did Thursday and Friday, I did the QQQ. I did it with all the different techniques, as well as, I hope I can find it, as well as the naked chart? Well, here it is with ABCD, pulls back, ABCD, 10-minute chart, makes a top at 100.48, pulls back, hits the 200-period moving averages, bounces again, makes another A to B to C to D. This is peak A, peak B, peak C, got nothing to do with A to B equals C to D. This is peak A, B, C, D. And then we get 116, turns around, and now it's plummeting and it's going down. This is the first little bit of support. We might see some kind of a rally attempt here. That's with the technicals. Look, without the technicals, oops, that wasn't the right one. I don't know if I'll find it in time. So I just want to do a quick wrap of what I'm looking at and the reason why we have no long positions. We're only looking at the short side. Well, we have short positions that you can buy long, which is great for people who don't like to short. We've got ETFs or ETNs that you can buy on the long side as if you were shorting the stock. And as it goes down, your price goes up. It's like looking at bonds. Remember bonds, when the yields go down, what happens to the price? Price goes up. So here's the ESZ. This is the E-mini. With the P, A, B, C, D, goes to an E, makes that cup formation at F. This morning it goes to at 940, it goes to 90, 99.25, and plop, here it comes down. Here are the QQQs without. Remember the QQQ we were looking at it Friday? I said, I think we've made a top here of consequence. Well, look at that. Look at the way we've come down from that 100. This is the QQQ series, made a high of 100.48 at 940 on the 19th. Look where we've come down to. This is the naked chart. This is just using the techniques that I discussed. I said, how about we add a couple of trend lines? And those are the trend lines we added. So please think about that, especially if you're going to do the Nadix platform, because that Nadix platform is fantastic for 10-minute charts, as you've seen, as Daryl and Tom have shown often enough. So here we go. I'm looking at the Dow. I'll go to this chart right here. This is my subscribers see every day. This is the Dow. It made that reversal candle like an evening star right there at a peak here at 17,350. I called it a potential Chapman wave road wave. That's because it goes above the previous highs, like a right arm extension in a way. This candle is really important. Why? Because if in the next 3 days the Dow closes, it doesn't have to actually close, but if it goes under 17,160, it's at 17,201. If it goes under and then closes underneath there, that says we're done for this move until we've had a consolidation, at the minimum, a consolidation. And the things that I'm looking at, and then the Chapman wave trend gauge gave a fantastic signal on Friday to say that there should be a rug pull before any rally attempt is made on Monday. So that one's working beautifully. So let's go back to this. In terms of what I'm looking at, I'll do more over the week about the weekly chart. Has it recycled? What is the implication? Does it mean that the 16 trend line at 16,500 is sacred, that we won't break it? Does it mean that under no condition will we break 16,333? Well, that's what I'll be discussing. But in the meantime, back at the ranch, we have at least a short-term sell signal in place in almost all the indices, and that's really important. I'm going step by step here, and the VIX index at this particular point is really moving. This is the first time we've seen that kind of volatility. Look at that gap up. Beautiful. I love this. 13.90 up, 14.78%. Nice. We are actually long this particular instrument. So as far as I'm concerned, the die has been cast, at least for the short term. I want to go step by step. I could make other statements. It's ridiculous. I have to go step by step. We've seen how quickly buyers come in. I don't want anyone to be fooled. I think this one could be a little more serious than the other pullbacks. So we've got that done, and we've got Larry Pesavento coming up. Folks, have a fantastic day. I'll be back tomorrow. Check out my opening call. Check out the Nadix competition on the front page of TFNN. See you tomorrow. Stay tuned for Larry. Should be a great show, great programming.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.